The following is a presentation of TFNN. Live at TFNN. The Money Masters. Now, the Money Masters.
Welcome, folks, to the Money Masters Show. I'm your host, Steve Rhodes. Thanks so much for joining us right now. We've got the Dow off about 14 points, S&P down 3, Composite off 3, Russell off $1.80 out there. Popping this morning, you got Mellnex Technologies, MLNX, which has been a stock getting hammered up 5%. That's up $3 and change. We'll go take a look at that stock chart. VMware up $3 and change. FedEx up $2.50. They were out with earnings earlier. CF Industries up a couple of bucks. To the downside, leading to the downside is Intuitive Surgical off about 1.5%. That's off $8. Apple as well down $7 this morning, about 1 2/10%. Regeneron Pharmaceuticals off 3. Priceline off 3. Navistar off a couple. Biogen, BIIB, is off a couple bucks as well. Our call-in number is 877-927-6648. We're going to go take a look at silver right now. Bob had called at the end of the first hour, and we didn't get to silver. Silver, he's taking a look at trying to find a long position in silver. So let's through the SLV, I'm going to start off by taking a look at the actual silver contract. We're going to take a look at the continuous contract. What we can see here is silver right now is completing or is still working on an A to B equals CD down. Now, this is the short A to B equals CD down. This is coming off of the highs in the bearish engulfing candle that it created on November 30th out there. The high of that candle is 34.42. That's your A point. Your B point is the trading session low on December 5th. That price is 32.58. Makes a retracement. If we go take a look at retracements here, looks like about a 0.618 retracement. Looks like between the 0.618 and 786 level. What silver did do, if we take a look at the B point, 48,000 contracts at the B point as silver came through. They came through with 47,000 contracts on December the 13th. So about the same volume. That works for me. Actually, 50 or 60,000 contracts on December 14th out there. So that really works. That confirms your A to B equals CD down. Now what silver has done is it has moved, it's moving past the 1.272 A to B equals CD areas without any bulls in sight. And that says that it wants lower price. If we take a look at what that is, well, it's moving into the swing point from November 5th out there. That swing point, 62,000 shares. So far this morning, it's rejected that area here as it's gotten down there. It's trading right now up above that level. When I say that level, I'm referring to the high of November 5th, $31.25. You've got silver at $31.30 right now. However, it looks to me like it wants lower price. Now, if silver, in which you'd really ideally what you would be looking for, Bob, or anybody looking for a long position, because if we take a look at the retracement here, let's do that. We're going to come off of that swing point low. In fact, so that swing point low, again, of November 5th, all the way up to the high out there. So many lines. We're a little bit below the 0.786 level. So what this really says to me is that silver here wants to at least do a 100% move of a move. Now, it's testing that swing point, and that could be the test out there. But ideally, your better trade would be as silver comes back to the November 5th low of $30.65, and then you want to see some type of bullish candle to let you know that it's okay to go ahead and take that trade and step in there. If silver comes down into that November 5th area, volume picks up, meaning more than 62,000 shares. And certainly if it closes below 30.65, what silver's really doing is set up a larger A to B equals CD down. Now, those two little lines, squiggly lines on my screen out here, there's a blue and a red line. Those are lagging indicators. Those are moving averages. Those are the 20 and 50-day exponential moving average, getting very close to a crossover. And that's very important to be paying attention to. Lagging indicators, still lagging indicators are great from a momentum. They're not going to call the top or the bottom anywhere, but they are going to help you with regard to momentum. And why is that important? Well, look, as silver broke out, and it broke out really, came off of the lows of June 29th out there with a bullish engulfing candle when the prior session had tested the hammer all the way back on the left-hand side of the chart. And we'll take a look at that because it's as good a chart as any to take a look and be able to learn from. But the point that I wanted to make to you is this. You had a positive crossover with the 20 slicing back up through the 50-day on August the 21st out there, and silver went on to make its highs. You haven't gotten that crossover, although today might be the day. This is the crossover to the downside. That would give you an indication there from a lagging indicator that silver has more of a run to the downside. Now, what that says is that could be set up the larger A to B equals CD down. What that looks like is, as such as we draw that pattern in here, that's the larger one, which says silver could get down into the $28.37 area, maybe $29.67, which is a bit higher. That would be the one-to-one A to B equals CD. So on the silver, on SLV, and really what you've got to do if you are trading the SLV, you need to somehow get access to the continuous contract at least to be able to trade off of it, because otherwise you are just simply, you've got two hands tied behind your back when you're trading. You don't want to do that. And, if you don't have access to the futures, maybe just simply go over to the homepage at tfnn.com and click on the Nadex banner and open up a Nadex account. I think you can put $100 inside that. I know you can put $100 inside that account just to open it up. And then you've got access to their charts. And they're good charts. I haven't, I've watched Daryl use the charts, so they look like a good charts and good data out there, and that will become a better way to really trade the SLV. You want to be paying attention to what the silver contract is doing and look for turns there. So I hope that helps you out that are listening, as well as Bob out here. Now, before we get off of the silver contract, let's go take a look at that hammer, because we were talking about hammer candles during the Trader's Edge show, and there's a hammer of hammers. That happens to be in silver, the September 26th candle out there. Now, that one, I'll blow this up on the screen. Take a look at that as a hammer candle. Here's the problem with this hammer candle is that here on this day you had silver pushed down to $26, and 15 cents. And then during that trading session, the bulls roared back, pushed it up to the, in essence, where it almost opened up towards its session highs. That is a beautiful hammer. You want to have patience on this. The volume on that candle as well was 104,000 contracts. And the beauty of it is, as the hammer candle was tested, that low was tested on December 29th, 2011, with only 32,000 contracts. That is beautiful. Didn't give you much of a bullish candle, not a single day, not a double day, but a triple day bullish engulfing candle is what it did. And you did see silver go ahead and move up. Now, silver moved up, came into a trend line that's really established the trend line. That's that blue diagonal line that you see on my screen. Silver came all the way back down there, gave another shot here. This time, though, gave you the real bullish engulfing candle, which was on June 29th, and that silver pulled back into that area on 46,000 shares. And so be careful on the metals out here. The metals here, even with King dollar pulling back. Right now, you've got the King down 21 cents, and silver is trading lower, 1 1/10% lower out there. That must make you say, something to think about out there. Definitely a correlation that has become disconnected out here. Let's go take a look at the indexes, as we do when we start the Money Masters show out here. So let's go see what patterns we've got out here. We'll start with the S&P 500. Yesterday and the day before, having two very strong candle formations out there on a scale of 1 to 10, 1 being the strongest. Both those are powerful 1 candles out there. So, and as they were moving up, what was interesting is price stopped at the 0.786 retracement area of the move off of September 14th all the way down to lows of November 16th. Now, that's why we're having a pause here today in the markets, because what you also had here, so you had the A to B equals CD, you also had a expansion of swing points, your B to C swing points out here, which is the high of November 23rd out there. That high is 1409.16, down to the low that was put in on November the 28th. That is at 1335. And what you'll see is a 2.618 expansion. So what you've got here is you've got two fantastic Fibonacci numbers coming together at that 1448, 14 level. Yesterday you had a close of 1446 out there. So that is the next line that is drawn in the sand with regard to resistance here. And if that gets taken out, folks, with having those type of great Fibonacci contraction and expansion numbers, the 0.786 is your contraction number, the 2.618 is your expansion number out there. What that says is not only will the S&P go make a 100% move and tag that September 14th candle out there, that low is 1460.07. It will tag the high, and most likely it'll turn into a butterfly pattern. But first, though, it'll have to break this area. And so it hasn't done that just yet. Now, there's divergences out there in the marketplace. I'm not going to go through them all here, but what you could do, folks, is you could go test drive my newsletter for 30 days. In fact, if you like it, it costs you, if you take advantage of the Tiger Dollar promotion that we've got out here, it's kind of like $2.50 or $3 a day, I think, if you take advantage of the full bonus that we provide to you. If you haven't, folks, if you're like me and you save all of your shopping to the last minute, well, today is the last minute when it comes to the Tiger Dollar promotion that we've got out there, where we're going to give you a 25% bonus. So 500 becomes, I got to do it as I should be able to easily do that, becomes about $80 or so. So 500 becomes $580. 1,000 is $1,250 out there. You do the math on it, and and what also you get, folks, is a bonus up to about 10%. It's either anything under $1,000 in Tiger Dollars is a 5% contribution made on your behalf to the Salvation Army, and anything over that is a 10%. And so you would be helping yourself and helping others out there. So if you're wondering why the market is doing what it's doing today, it's because, and it's why you want to understand your Fibonacci numbers out there. I am short the marketplace, did not get stopped out yesterday, missed getting stopped out by a few pennies or so. And what I also knew, because these are patterns, folks, that you are able to draw in advance. So, if you've been listening to the show, we have identified areas of resistance for you. That's this horizontal. As we take a look at the S&P 500, that's this horizontal red line. Well, it got sliced through like butter yesterday with that numero uno strength candle out there yesterday. But what I also knew was, because you want to draw these retracement and expansion areas on your chart, I also knew that we had a convergence of a expansion and a contraction that was setting up here at the 1448 area. And so that was important to understand, that at least the line was drawn in the sand there. That's on the S&P. We'll go take a look at all the indexes out here. Let's take a look at the Dow. So let's go take a look at the big dog out here. And you can see here the Dow, what the Dow did yesterday was went all the way back to the lows here off of October 4th. So that's our trend line, right? That the Dow crushed through that area. And as we say, when you break a trend line, what you're going to do, whether it's breaking it to the upside, to the downside, what it's going to do, it's going to go back and test it. Well, what did the Dow do yesterday? It got up and it tested that trend line. And as it was doing that, it was making a 0.786 Gartley sell pattern. So now, with regard to Fibonacci expansion off of the B to C level, 2.414. If you do this enough, you will see that also shows up as a expansion number. I believe that is, I forget what that's the square root of, but that is I call that a junior number that is out there, pretty close to 2.618 as well. So you've got another Gartley sell pattern out here. Again, if that fails, it says the Dow will go travel up into the September 14th level as well. One thing at a time, one day at a time. 877-927-6648. We'll be right back, folks.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Happy holidays from TFNN. Our most rewarding Tiger Dollar sale is back this December at TFNN. Normally, we offer only a 10 to 20% bonus on Tiger Dollar purchases, but through December 19th only, when you purchase Tiger Dollars to spend on any of our products, you get a 25% bonus on your purchase, and up to 10% of whatever you spend will be donated to the Salvation Army in your name. You'll receive a personalized thank you letter directly from our local Clearwater Salvation Army administrator in appreciation of your donation. Tiger Dollars can be used on any of our newsletters or subscriptions, never expire, and are fully transferable. Take advantage of our most rewarding Tiger Dollar sale of the year right now. Visit TFNN.com for all the details and to make your purchase today. Happy holidays from TFNN.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks. Steve Rhodes, Tom O'Brien. Look what the cat dragged in.
I love it.
We get the Dow right now down 22. NASDAQ off 7. S&P's off 3. Great to see
Santa just delivered a great gift.
You know, I'll tell you, man, you talk about deviant markets. So we take out the swing point yesterday.
Yes.
We do it with volume.
Yes,
you know what
yes.
I mean? On the shorter term basis. Longer term it's down. And now, what you're looking at, Steve has the NYA up, and it's giving it up. And
yeah.
it just, last night, even this morning, I was saying to myself, you know what? This is about as deviant as you can get. Do you know what I mean?
We didn't talk about it last night. But so it was also nice to have a few hours where we actually weren't talking about the markets. But what was cool actually about yesterday, and as the market was moving up, if you take, actually I'm going to take a look at the S&P because it's the better breadth of what's going on out
yes.
there. But it formed a great Gartley sell pattern. So you got a 0.786 retracement,
look at that.
Almost to the T, and a 2.618 expansion,
right?
Also, so it's a great area where the line has really been drawn in the sand. We'll see what happens from here. But, it was nice that it stopped there. And then this morning here, as we were just talking about, with the New York Stock Exchange going up and testing the actual swing point high, because the New York Stock Exchange has been strong, and that's getting up and over September 14th, because the September 14th high is 85.15, and it got up to 85.19 this morning, and now it's, pulling back. So we'll see if this is the turn.
You know what's amazing? It is absolutely amazing, folks, how, for some reason, markets love to test.
Yeah.
I mean, continually. Do you know what I mean? And the NASDAQ is so far away from that high that I never thought it could test it. But, this morning, the S&P and the Dow said, hey, wants to go test it. But there you go. It is the NYA that wanted to do it. And also, because if you remember what happened, is that the NYA also gave the signal in September.
Oh, no question. Yeah, absolutely.
No doubt.
No question. And, and also, even was helping to give the signal coming into November 16th. So now we got Apple. Let's see, what is Apple doing here today? Because that's down.
That's down 680.
680 or what have you. So that's, we know that on the weekly basis, it's chipping away at that swing point.
Totally.
And man, when that chisels that thing out.
And the disconnect, bottom line, has been gold. Okay, with the dollar pulling back.
Yeah.
Okay, and see, what's happened, folks, is this: gold is going down with volume, the dollar's pulled back with lighter volume. So in that context, the dollar wants to go higher.
Yes.
And since we're talking about dollar, we can talk about the euro. We can talk about Rick paying his taxes up in British Columbia.
Beautiful.
Hey, Rick, what's going on?
How you guys doing today?
Hey, how you been, man? I miss you.
Oh, I'm going to make a trip down there one of these days.
That's a beautiful thing. We like that.
Absolutely.
Do it in the winter, man. Right now it's 72, 73 degrees out. It's like insane out.
Yeah, it's like, no air conditioning in the car. Just put the windows down.
Oh, big time.
I might have to go down there when Tampa's playing the Vancouver Canucks.
Oh, man,
We'd like that. Are they ever going to start?
Whenever that happens.
Yeah, okay, yeah. I think that might be a year from now then, huh?
You know what? You just mentioned Apple, and, yesterday how we went up on light volume to the previous day. It was pretty obvious we're getting a pullback here. And the one analyst, I guess, this morning, I didn't catch it all, but he had talked it up, when it went to 700 and so forth. And I think he was talking to Kramer, and he says, but now, and he cut his price and everything, and he says, well, why did you say it was going to go to 700? He says, well, I didn't think it was worth going to 700, but I thought it would trade to 700. So now Kramer's going, well, we don't want analysts talking about where stocks are going from a trading perspective.
Really?
It was rather hilarious.
That is hilarious.
Yeah, it was really good. I think the one thing we're watching here, and I know, Tom, you mentioned yesterday how we can possibly go a lot higher, and I'll tell you, if you look at that euro, we got an inverted head and shoulder, and I think the euro has a chance to go to 135. I think we're getting a pullback now, which would coincide potentially with what some of the things you were saying yesterday. We're because I think what's happening is things might be calm on the fiscal cliff talks right now, but I wouldn't doubt it if they don't get a deal, which looks like maybe it won't happen. Your dollar then is going to show weakness, and the euro could go to 135. And I don't know. I looked at the euro yesterday. I thought, okay, today we're probably going to go higher, which we're doing. And if you really want to see it as well. I remember when you used to have Tim Ord there, he always said, too, watch out for the ETF volumes. But look at the FXE, because a lot of your Tigresses and Tigers can't always get the currencies.
No, for sure. Yeah, right.
But you got to watch the volumes. You can't really trade on the volumes, but the FXE coincides. I just checked it out. It's $1.06 lower than the euro. But so 130,
and it's over that swing with dramatically lighter volume.
Well,
see,
now 130 becomes support.
Yeah, on the way down. Yes, right. No doubt.
But I mean, it could go to 134.
If I coulda, woulda, shoulda.
But it's not real. You stay right
we'll
there, folks. Steve and I come right back.
You heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks. Steve Rhodes, Tom O'Brien. Appreciate you growling and prowling out here with us. We have the Dow right now down 17, NASDAQ off 3.5, S&P's off 4. And
I heard you talking yesterday about the fact that you wait till like Christmas Eve to do all your shopping.
I know.
And today's really Christmas Eve as far as TFNN is concerned. It's our Tiger Dollar, So folks that have waited to the last minute, today's their day.
Today's the day.
Because most of us are like you.
I'm telling you.
We wait to the last minute.
And what Steve's talking about, folks, if you want to take advantage of the Tiger Dollar deal, today's the last day. We match 25%. So you want to make 25% on your money, today's the day. Tiger dolls are good, of course, for all products at TFNN. They're totally transferable. And just to give you an idea how much you actually save, if you actually get a year of my newsletter, you use Tiger dollars right now, you end up saving about $800.
Yeah.
So it's a big money savings. The way that it works at this time of the year, we donate 5% of anything that you buy under $1,000 and 10% of $1,000 or over, and you get the actual certificate, well, a letter from, with the tax write-off from the Salvation Army.
Right.
So you can check it out on the front page of TFNN. But there's no doubt. You talk about, what I'm worried about now is that you got to picture this, folks. So I got to get some presents up to Boston, so I have to actually go before Christmas Eve. I have to do some hustling tonight. I have to do some hustling tonight. That's what I got to do.
Good. Well, you can take advantage of FedEx. Hey, they were out with numbers today.
Yeah,
they go out and they're trading up about 3% here.
Yeah, and the numbers were bad, which is pretty funny. So let's see what we're looking at here. So, and they got some juice behind that move here, but let's see what they're going into.
No, they sure do.
Yeah.
Yeah, they're taking out. So they're coming all the way back to their swing point highs. Coming back to March 21st or or even the February area. So that March 21st has got about 4 million shares. Yeah. It's trading inside it right now. So far, it's already done 1.8. Yeah. So not too bad with an hour's trading out there.
Real juice.
Yeah.
No doubt. Real juice.
And I'm sure putting some energy into the transports as well. The transports had a real strong day yesterday as well. What didn't have a strong day yesterday? Everything did, even if it was on the reverse side, it was a strong day on the way down.
Yeah, and you got all we have here, folks, is today's Wednesday, right? So we get today and tomorrow.
Yeah. Really, because
Friday, I think Friday's going to be a half day. Monday is a half day, but Monday is going to be a 0 day, folks, because with Christmas falling on Tuesday, it's just there's not going to be anything there.
Yeah, and even that week, we come back. Right. We come back. We do Wednesday, Thursday, Friday.
Right.
Excuse me. It's going to be pretty weak volume out in the marketplace.
No, it is.
Which is enough. Which is enough from an energy standpoint. So when we were taking a look at yesterday's price action, it's why we're more leaning towards the fact that it looks like this market could just simply drift up into that area.
Yeah, there's no doubt. Just like the DAX has. The DAX, folks, has been up like 50 points every day. For almost three and a half weeks. Yeah. And what did happen yesterday is that the DAX got some juice in it, some volume behind it. The FTSE did. All the indices, got some juice behind them. So.
Yeah, and the DAX has just almost been a straight line move.
It has.
I mean, it has. Really. Take a look at that. That's quite a vertical ascent out there. DAX hasn't seen that in a long time.
No, it hasn't. And
it looks to me the easiest way to measure, where the DAX might want to trade to is just simply an expansion of the swing point. The swing point high, which was a consolidation at September 21st, just down to the low on November 16th. Looks like it wants to get into the 1.618 area, somewhere in the 7,800 level.
No, it's a big move, because if you're watching Steve's screen right now, folks, if you're not, we'll explain to you going on to work in the morning, but the top of that channel is pretty high.
Yeah. Oh, yeah.
Yeah,
absolutely. And like we said, the FTSE took it out. How about the Nikkei? Oh, my goodness. What a move that this thing is.
Listen, the yen and the Nikkei, folks, is where you're going to want to be for the next 2 or 3 years. There's no doubt. Yeah. I mean, it's all there. And, this yen, it's a great trade. I mean,
well, you went ahead and you started taking a look at correlating it with regard to bonds, with just how you identified it as really a great trade. We've talked about this really for quite some time.
We have, right.
About the best trades out there is for the folks in Japan to be able to invest in U.S. assets.
Totally.
So whether it be bonds, whether it be real estate, and you were out there buying houses this morning.
I was.
You are the king.
I was.
You are the king. We're putting people to work and everything. It's great.
Big time, I know. It is amazing, isn't it?
Yeah.
I know, it really is. Yeah. So it's funny. It's cool, folks, and it's always cool that when you're getting into something, of course, all us Tigers and Tigresses, we really get into things and we get into them anyway. But I had been thinking about doing this for so long.
Yeah,
everything was in place. It wasn't like, and it's interesting because what is happening now is that there's, you have all these other, competitors sniffing around, you know what I mean? Sure. What is he doing, man? Do you know what I mean? They can go one way and I go another way. They go this way, I go that way.
Yeah.
And it's pretty wild. And specifically what it is, folks, is that the context of different parts of Pinellas, and what's so neat about Pinellas County is that it's not a cookie-cutter deal.
Right.
So it's a whole different ball game. You get bungalow houses. You got all these different types of houses where, being from Boston, number one, I've been used to doing these over.
Yes.
Okay. So what happens now? This is pretty wild. What happens if you haven't been in a northeast city? Okay, those northeast houses, just like these older houses here, are built 10 times better than new houses. I mean, dramatically. When you're going in them, the hardwood floors are a whole different. They're real hardwood, whole different dynamic.
Yeah, exactly.
And so it's really interesting looking at them. And what has happened here is that whether it's BlackRock, I'm going against someone else, they want a more of a cookie cutter.
Okay.
Than a hardcore house that because they don't know how to value it.
Okay.
Which is because they're valuing it, of course, on a spreadsheet. Versus what does it really cost? So it's really interesting, man.
Well, it's great. It's great what you're doing, and you lead a great example for all the listeners out there, because you're always showing people what you can do. I talked this morning. Today is the anniversary of my dad's birthday.
Oh, cool.
So in this morning when I was kicking off the show, was really just talking about just some of the things that he taught me. Your father's your first mentor out there. And it was really always about what you could do. It's never about what you couldn't do.
Right.
And that's really what I want people to always grasp from whatever it is that we communicate.
No doubt.
And I want them to turn off the people that are on the news or wherever they're listening that are telling folks what you can't do. Because that is, it
drives me crazy. It's you know what, folks? You got to understand something, right? If you want to make real money, sometimes, what I really say, and this is terrible, because I've had people say to me, right, especially, you get the Phoenix Cliff and all this, and some people that, we get friends that have a lot of money, and they're saying to me, well, what do you think about this and that? I feel like saying to them, if you want to make real money, just stop it, man. Just stop it. It's it's not even close. It has nothing to do with making money or having a life.
For sure. No question.
Those politicians are sick.
Yeah. Well, and even who's the heck who actually named it the fiscal cliff, and why did everybody go ahead and buy into it?
No, you're absolutely right. No, totally.
I mean, if they just changed it was, and the whole idea was to sell fear, which is what people try to do. That's about telling you what you can't do. Again.
Totally. It's unbelievable.
Yeah.
It's just, and it's hammering. It's hammering on a continual basis.
Absolutely.
It's crazy, man.
Yeah. So the metals, that's really been kind of the biggest divergence that we've seen.
It's the biggest divergence.
Okay, and you're absolutely a metals expert out here. And so you've seen this routine before.
Yeah.
You've seen this game. How do you think this ends up playing out?
I think it's a problem. I think what we're going to have, I think the biggest player in the gold space is John Paulson.
Yes.
I think what we're watching here is that he probably has enough subscriptions that have decided they want their money back at the end of this year.
Oh, okay.
And he has to liquidate. And
okay.
He's a huge player here, folks, because we're going lower, and there's a disconnect. Number one, of we know they're printing so much money. It's like, okay, why is it going lower? Well,
yes.
The larger picture is that it's a technical move. But I think that's the problem.
Okay.
And it's a big problem.
That's adding to it for sure.
It's adding to it, and the dollar wants to go higher. See, there's a disconnect, but it's in harmony too. Because what's happening is that gold's coming down on volume, the dollar's coming down on lighter volume.
Yes.
What that sets up is that I suspect is that the dollar still wants to go higher, and gold still wants to go lower.
Yes.
And it's real possible what ends up happening with the bigger buys on gold is that no one wants anything to do with it. And that's how this is probably setting up. This is probably going to set up a 15, 20, 15, 30.
You think, okay.
Boy,
that'd be nice.
And no one will want it. And that will be the buy, folks, because what will end up happening, then you'll have a trade on that you can make 50% on. Because I think gold, you know, after this correction, we've been on this correction almost 2 years now.
Yes.
So after this correction, you know, you'll see gold at 2250, 2300.
Yeah.
But it needs that type of move down in order to basically flush out, you know, people that continually buy. I told you the last time with these gold shows, well, they wouldn't even invite me back last time because
they didn't want to hear the reality.
I know it's you know, and it's sad, you know, and what ends up happening is that every single time the same people are up there saying buy, and I'm looking, I'm saying to myself, this is as bad as the equity. You think that the gold people would be different, that you know, there's not such, you know, the equity people, they know that, you know, everything's pumping. Well, there's no difference,
right?
Which is such a bummer, man. Do you know what I mean? Because it's like, what are you, crazy, man?
Yes.
You know, all of a sudden, anyway. But
well, that 1530 would be, you know, if you just take a look at if you're watching us on Tiger TV, we're just looking at this consolidation.
Right.
You know, that it's been at the low, you know, it's a big hammer candle, too, on September 27th, both gold and silver.
Right.
And it's a nice tested area in that 1535 level. You know, it's been tested 1, 2, you can almost say really 3 times.
Exactly.
But really, 2 good tests down there. Get another third test would be nice. And you're talking about, you know, the 1535s back up to 1800.
Right. And what you have, now this is what's cool, folks, okay, is that there are a lot of gold and silver stocks that are destroyed. That won't come back.
Yeah.
But there are about 6 of them that have high volume at the high.
Oh,
that's
question.
That's why, to me, I know it's going back. And, you know, I'm saying I know.
No,
but to me, that's how I trade. So it's like I know they're going back up there because you don't end a market on a high volume note.
Right.
And they have the high volume at the highs. And it's dramatic. It's
no,
not,
it is.
You know,
it is, yeah.
It's one of those deals that's how markets work. You know?
Absolutely.
And it totally makes sense, too, because, you know, it's free money out here right now. And, you know, when you have free money, is it going to last another couple of years? Yeah, it probably is.
Yes.
You know what I mean? But once it starts creeping in, it's already creeping in, but it'll accelerate. But I don't think it's going to accelerate for a couple of years, but it will accelerate.
Yeah.
Once it accelerates, you'll get used to it. You know, 3 years from now, gold at 2250 is not a big deal.
Right.
It's just not. You know what I mean? No, it won't be. Because, you know, I can tell you, between houses and rent structures, you know, listen to this, folks. This is amazing. In Clearwater right now, there's a couple units there. We're at the end of this year.
Yes. They're
going up 20% in their rents. And they're getting it. No one's moving.
Yeah.
20. I'm talking about 20% on a big number. 20%. You know, well, I found this out last night. We had a Christmas party last night, and a couple of the folks are living in the same development. And I thought I was hearing things. 20%.
Yeah. No, it is. That's why. That's why what you're doing with the Tiger Real Estate Opportunity Fund, you know, it's got the cash flow potential.
Yeah,
okay.
Exactly.
It's not potential, the cash flow reality.
Right.
You know.
Right.
You know, you're buying the amortization of any mortgage is half of what you're would charge for rent or more. And your rent is double that. You know, and then you've got the appreciation that's going to happen over time.
Exactly. And what happens, folks, is that, which is so neat about it, is that this is the first time since I was in the bond business in '80.
Yes.
That every time you're buying, I know I'm already making money. It's not even. You know, I've explained this many times before. You know, they say like, whether it's Goldman Sachs or Morgan Stanley, those traders, they're really not traders when they have the orders.
Right. That's right. Yeah. When you're looking at the book,
that's what we're doing in real estate. Because the reality is, I already know what you're buying. I won't.
It's a good
it is. Yeah. And, you know, everyone's going to think you're a genius, but the bottom line is that, you know, that's the reality. It's funny how it works. So,
well, you are a genius.
Oh, you're too much. Yeah.
You are, absolutely. So today, Wednesday, we've got Basil that follows us.
Yeah.
It is Wednesday, right?
It is Wednesday, yep.
And we go up to Larry Pesavento, Daryl Martin from 1 to 2. Now, David, I think he might be out. He was sick yesterday. So.
Man, this guy, he really got sick, man.
Yeah.
This thing that's going around, it's going around the whole country, is pretty intense, man. There's no doubt, you know.
Yeah.
It's you had it.
I did.
Angie has it now. My wife has it now. She was up in Boston. We're not sure whether she got it from one of our children, you know, one of the grandchildren, or just on that plane coming all the way back. Do you know what I mean? So.
Well, thanks for joining back again this morning. Now, the Mayan calendar, when is the end of the world?
I think it's 19th, 21st.
21st, okay. Yeah. So got a couple more days.
Nah, it's a beautiful thing.
I love it.
You stay right there, folks. Don't forget about the Tiger Dollar promotion. This is the last day. So if you want to make 25% on your money, well, That's going to be the easiest way you're going to make it today.
Absolutely.
Check it out on the front page of TFNN. Steve Rhodes, Tom O'Brien, appreciate you growling and prowling. You stay right there. We have the Dow down 9, NASDAQ off 1, S&P's off 3. We're going to be right back.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. We have the Dow right now down 9, NASDAQ up 1, S&Ps are off a couple. Let's go to Fish in Riverview. Hey, Fish, what's going on?
Hey, guys. How you doing?
Doing great, man. You having a good day out there?
Yeah, great. Hey, my wife and I used Tiger Metal Exchange recently, and everything worked good with that, so thanks for that.
Well, we appreciate it. Thank you so much.
Yes, absolutely.
Thanks, guys. So my question is, this expected, you were talking about, the market maybe drifting up and so forth. Is this something that's playable if you're in cash in the 401k to put your money in the market for a bit, or stay away at this point?
I'd keep your money in cash, man.
Okay.
Yeah.
No worries.
The risk value there is just not worth it.
Okay, great.
Because what you have is that, well, see, this is a perfect day for this, too, because what you have, the deviance right here is that we took out the small swing point yesterday with volume, which is saying, hey, you can go to the highs. You know what I mean? Your next couple days, if you listened, Larry Pesavento, when you listen to his show today, you'll see that he stops trading around this whole Christmas time all the time. And it's really... Okay. Smart to do that. Yeah. Because what happens is that you can move the market around with absolutely no rhyme or reason, okay? And at the same context, when it drops out of bed, it drops out of bed dramatically. Like even at the break, Steve and I are talking, I said, the fiscal cliff, is going to be news? And it's like, I don't think the market even cares about the fiscal cliff anymore. Now, where huge downdrafts have occurred, when you get this close to the end of the year, you can stay flat to the end of the year, and then January 3rd, it just blows out. I mean, and so, yeah, I'd stay in cash, man. Cash is king, period.
All right. Well, Merry Christmas, Happy Holidays, guys. Thanks for the information.
And, thank you. You bet.
Thanks for the gold buy.
You bet. And thanks for always listening to us, Fish. We appreciate that.
Have a great one, man. Have a safe one.
Yeah, it's just the reward to risk just isn't there.
No, it's not.
You got the S&P is so close to the swing point. It's 20 points away from the lows. The low of the swing point's 1460. You're at 1444 right now. It's just not. There's limited upside potential, it seems, versus it's just too much.
And what happens, and this is important, that when you go in as he is going to go in for 401k,
right?
You can't get out immediately. So what ends up happening is that you give the order. Right. And then you're out at the end of the day.
Right,
it's like the end of the day. That can be end of the...
That's right.
The end of the day is a long time, folks, if things are going against you. Do you know what I mean?
Yeah.
So, when you're putting money in like that, you want to try to put it in... You want to put it in whether it's in thirds, you know what I mean, on downdrafts versus updrafts.
No, you do. You do. And that's where, so on the S&P 500, what I've been showing folks is just simply using, the relative strength indicator, down at the which I've got in the bottom of my screen.
Okay.
And if you just simply utilize that when you got down into the oversold or extreme areas,
right?
Okay, when it's down towards the 30 or below level, and that's where you started coming into a market.
Yes.
That's where you want to start taking your positions.
Right.
And when it gets up towards these high levels here, when it starts getting those bought conditions, that's where you want to either decide that you're going to go ahead and take some heat if you had a good entry, or you start to lighten up on on the load. You don't have to sell short. You've gotten a good move, and you can do it over whatever time frame it is you want to trade. It works the same way if you want to go on a weekly time frame. And so that's what I want people to do. And you can see here, it's up towards the highs. So it's up towards the highs.
Right.
And so when somebody's taking a look at a longer term, what do I do with my money I've been in cash? Instead, I say just study the charts and use this indicator and be patient.
Because what happens here, and this is where you do not want to see this up at highs when we're not at highs.
That's correct.
And that's what you have.
That's right. Yeah. That's so there's other ways to actually use it. So
yeah, no doubt.
Yeah.
Pretty wild. Listen, folks, you stay right there. We'll get our man, Mr. Basil Chapman, coming up next. Larry, Darryl, Dave White, Ken Shreven back here. Don't forget about the Tiger deal. 25% on your money. This is the last day, folks.
Have a great day, folks.